Crude prices soar as the US imposes wider sanctions on Russian oil. Asian chip makers ride the AI profit wave, posting record revenues. And Ethiopia launches its first stock market, opening the economy to global investors. Hello, I'm Taiba Aydin with the latest business and finance news here on TRT World. Oil prices extended gains for a third session on Monday amid concerns over potential supply disruptions stemming from new US sanctions on Russia's oil sector. Brent crude futures climbed 1.8% above $81 a barrel, its highest in 4 months. Meanwhile, US West Texas Intermediate rose 2% to $78. That's as wider US sanctions are expected to affect Russian crude exports to top buyers China and India. On Friday, the US imposed some of the harshest sanctions yet against Russia's oil industry, targeting 2 large exporters, over 180 vessels and more than 150 tankers. The new sanctions could push China and India, the world's top and third largest oil importers, respectively, to source more crude from the Middle East, Africa and the Americas. For more on this, we're joined by Inky Cho in Kuala Lumpur. He's a financial market strategist at XNES. Good to have you with us, Inky. Now, how much of an impact could this have on Russia's oil industry?
Good morning. Thanks for having me. It is good to be here. As mentioned, oil prices are currently experiencing a significant surge driven by decisive sanctions imposed by the Biden administration on Russian crude oil. And the United States has taken a firm stance aggressively sanctioning Russia's oil industry. The U.S. government has announced sanctions against approximately 200 energy-related individuals and organizations, including major Russian oil producers like notable Russian energy companies such as Gazprom, and along with Russian ship insurance firms and selected Russian officials have also been targeted by the sanctions. And this decisive action by the U.S. aims to effectively undermine the oil trade, which is a critical revenue stream for Russia's war efforts. And unsurprisingly, Russia strictly opposes this initiative. However, there is an increasing likelihood that China and India, which have been major importers of Russian crude oil, will redirect their focus toward the Middle East instead of relying on the Russian oil, which would put some negative effects to the Russian oil industry.
And could oil prices remain elevated going forward, or is this just an initial reaction to those sanctions?
Well, oil prices have steadily risen over the past week, and in addition to the U.S. sanction on the Russian crude oil, expectations for the Chinese government's economy stimulus package and increased demand for heating oil due to the cold wave in southern part of the U.S. are the leading causes of the recent rise in oil prices. And according to a recent JP Morgan analysis, each degree Fahrenheit below the 10-year average in winter temperatures could increase demand for heating oil by 113,000 barrels per day, which would continue to put upward pressure on oil prices. And one more thing to highlight is the anticipation surrounding the Chinese government's unveiled economic stimulus plan. And the announcement of issuing 3 trillion yuan in special government bonds demonstrates a strong commitment to revitalize the economy. So if these funds reach consumers directly, we can expect a marked increase in crude oil demand and subsequently higher oil prices.
Okay, Inky, we will come back to you in just a moment, but first we have this report on China's trade figures. China's December trade figures have beaten expectations as companies ramped up exports to offset sluggish demand ahead of President-elect Donald Trump's return to the White House. Exports surged 10.7% in December compared to the same period last year, reaching $336 billion. This marks the second highest monthly figure on record and follows a 6.9% 2.7% growth in November. Meanwhile, imports delivered an unexpected boost, growing by 1% during the period, the strongest performance since July 2024. This was a sharp contrast to the declines of 3.9% in November and 2.3% in October, pointing to a recovery in domestic demand. With exports far outpacing imports, China's trade surplus widened to $104.8 billion, up from $97.4 billion in November. For the entire year, the surplus soared to a record $992 billion, driven by a 21% jump in exports. Despite the strong numbers, there are concerns for the future. President-elect Donald Trump, who takes office next week, has proposed imposing hefty tariffs on Chinese goods, raising the spectre of a renewed trade war. He's pledged to implement a 10% tariff and close loopholes that Chinese exporters currently exploit to sell their products at lower prices in the US. Now, Inky, let's go back to you now. China's trade surplus hit a new record high last year, and now with the possibility of these new tariffs, how could Beijing's recovery be derailed?
So, well, even if the recent number was better than expected, China is still facing significant concerns over a sluggish domestic economy and the looming threats of some kind of deflation. And despite aggressive stimulus measures and eased monetary policy from the Chinese government aimed at boosting the demand, consumer inflation has plummeted to its lowest level in 9 months. And while recent economic indicators show some signs of stability compared to the first half of last year, seems like this momentum is insufficient to generate any upward pressure on prices. And furthermore, the potential imposition of 60% tariffs on China under a second Trump administration adds a serious cloud to the country's economic prospects. And investors now should focus on the effectiveness of the Chinese government's stimulus measures, and if the upcoming economic plan boosts liquidity and consumption significantly, it could help the Chinese economy and also revive the struggling Chinese stock market.
All right, Inky Cho, we will have to leave it there. Thank you very much for your analysis. Now, the world's biggest chip maker, Taiwan Semiconductor Manufacturing Company, has posted record revenues. This comes as the company continues to ride the AI profit wave. In the fourth quarter of last year, the company beat market forecasts and hit a revenue of more than $26 billion. For 2024, TSMC's revenue totaled nearly $88 billion, as the company recorded its highest annual sales since going public in 1994. TSMC manufactures semiconductors for some of the biggest tech firms like Apple and Nvidia, and as their demand goes up, so does TSMC's revenue. Meanwhile, Taiwan's Foxconn, the world's largest electronics maker, also smashed expectations, posting its highest ever revenue for the fourth quarter of last year. Its revenue was up 42.3%, reaching almost $20 billion. That's as sales for Apple's iPhone jumped 15.2% in the same quarter. Foxconn is one of its main suppliers. And firms taking full advantage of AI tech like Microsoft are set to spend $80 billion in the fiscal year to June. They plan to increase the number of their data centers that can handle AI workloads. For more on this, we're joined by Mark Humphrey-Jenner in Sydney. He's an Associate Professor of Finance at the University of New South Wales Business School. Hi there, Mark. Now, firstly, what's driven TSMC's record-breaking revenue in the fourth quarter, and how significant is the AI profit wave in this growth?
Well, firstly, thanks for having me. And TSMC has had some really good numbers recently. So, for example, its revenue seems to have gone up some 34% if we're looking at it in US dollar terms, or 38% otherwise, which is rather an astounding figure. It's gone up to about $26.3 billion in revenue. Now, that's for the fourth quarter. Now, what that effectively means is that TSMC is really riding a AI surge. And we've seen a lot of this emerge with myriad companies trying to build out data centers and also build out their IT infrastructure to be able to handle more AI activities and AI demands from consumers. To give you an example, Twitter/X, well, that recently did a partnership with HPE, which drove significant revenue for that company, or will drive significant revenue for that company. And the AI boom is really underscoring what is happening with TSMC. Now, fourth quarter profit is going to come out on the 16th of January. And analysts are expecting that to come in at about 11.4 billion US dollars, or the equivalent of Taiwan dollars. In essence, we're seeing a significant improvement in its position, which is why its stock price went up some 83% over the course of the last 12 months. Even if it isn't quite immune to broader stock market declines over the past week, it certainly has gone up quite significantly over the past 12 months.
Right, and Asian chip makers have benefited immensely as key suppliers to tech giants Nvidia and Apple. How will this be impacted by Trump's return to the White House next week?
Certainly, the chip makers, particularly out of Taiwan, but more generally, have benefited quite a lot from this boom. And this is manifested, in the profits and the profits forecasts for TSMC and the revenues for TSMC that are estimated, but also for Foxconn. Now, a lot of this has gone into products coming out of Apple and the like. But of course, when Donald Trump comes in, there's the looming prospect of some significant tariffs being imposed. The exact nature of those seems to change almost day by day at this point. There were concerns it might be broad-based across everything, across all countries, a 10% or so tariff across everything. It might alternatively be in the form of a tariff on some goods or some countries, or the magnitude of the tariff depending on how friendly the United States is with that country. So what that in essence means is that a number of companies like Apple might be considering trying to reshore some of their production, which means you'd have companies like Foxconn or TSMC, and TSMC has been really doing some of this, looking how to increase the manufacturing base in the United States to stave off those tariffs. But it's certainly something that analysts and these companies should be considering going forward in 2025.
All right, Mark, Humphrey, Jenna there in Sydney. We will have to leave it there. Thank you very much for joining us.
Thanks for having me. It's great being with you.
Now a quick look at some of the other top business stories from around the world. With fears mounting that Trump's policies might ignite more inflation, the latest jobs report is bringing some relief to the US Federal Reserve. In December, the unemployment rate slipped to 4.1%, down from 4.2% in November, helping to close out 2024 on a high note. The positive news removed pressure on the Fed to cut interest rates, offering them a chance to turn their attention back to tackling inflation. Chinese property giant Shimao saw its shares plummet by as much as 15%, hitting their lowest point since late September. The drop comes after the company reportedly received a winding up petition, joining local rival China Sunac in an ever-growing list of developers struggling with the crippling debt crisis that has gripped China's real estate sector. Johnson & Johnson is in talks to buy Intracellular Therapies for $10 billion. The company makes medicines for mental health and brain disorders. Its shares are up 40% this year as it works on a new depression drug, but officials say talks are still ongoing and the deal may not happen. And Gerard Butler's Den of Thieves 2 opened at number 1 at the box office, earning $15.5 million. The heist movie matched the 2018 original's debut performance. It's the first Lionsgate film in months to top the box office. Audiences praised the action-packed sequel, giving it strong reviews. Now, Ethiopia has officially launched its first ever stock market, the Ethiopian Securities Exchange. It's a historic shift after decades operating under a closed financial system. The government is now opening the economy to local and international investors. But what does this mean for Ethiopia's economic trajectory? Hinok Tesfaye reports from the capital, Addis Ababa.
After 50 years without a stock market, excitement is high here in Addis Ababa. The launch of the Ethiopian Securities Exchange, the ESX, by Prime Minister Abiy Ahmed represents a bold step towards economic modernization. The ESX is a platform designed to facilitate the trading of shares, bonds, and other financial instruments, marking Ethiopia's transition towards privatization and economic liberalization.
For the business community, I want to assure you that just as we succeeded with telecom, the Renaissance Dam, airlines, and other projects, the capital market will also succeed. So don't miss this opportunity to participate.
For a country with a traditionally tightly controlled economy, the launch offered the private sector unprecedented engagement with global markets. Prominent investor Engineer Tzedek views the development as a critical opportunity while stressing the importance of regulatory transparency to build investor confidence.
Small retailers, retail investors, depositors would be induced to invest in shares, and this would increase the volume of capital that's going to inflow into businesses, whether manufacturing, real estate, or services.
The exchange is projected to host up to 90 companies within the next decade, creating a dynamic platform for domestic and international investors. But obstacles remain.
The issues related to cybersecurity is one of the challenges. Beyond that, probably political instabilities, maybe lack of confidence. This is a market where you invest. So if we are looking for foreign investors to invest in this market, there must be also political stabilities. That can also be considered as one of the challenges, particularly in the short term, right?
The launch of this exchange forms part of major economic reforms aimed at reviving an economy battered by conflict and the pandemic. By listing state-owned enterprises like Ethio Telecom, the government hopes to attract investment and stimulate growth. While optimism is high, the long-term success of this bold reform remains uncertain. Henok Tasfai, TRT World, Addis Ababa.
For more, we're joined by Churchill Agutu, an economist at IC Group in the Kenyan capital, Nairobi. Good to have you with us, Churchill. Firstly, how does the ESX fit into Ethiopia's broader economic reforms, and what immediate benefits would it bring to the private sector?
Thanks for having me. I think if you look at the broader picture, you find that Ethiopia is currently in the second phase of its homegrown economic reform agenda. So this is like a blueprint of its economic growth, which has been running the last 6 years and coming to an end in 2030. So one of the planks of that is basically sectoral reforms and basically opening up which it has identified the inefficiencies in the market, and it will want to correct that one. So that fits in within that. The second, obviously, is around the current IMF program, which is around $3.3 billion, and it has an emphasis on privatization. So if you look at this, the emphasis of opening up the markets and also the privatization effects emphasis on the IMF program. So the opening of the Ethiopian Securities Exchange pretty much boils into that. The obvious benefits is basically access to capital to the small and medium enterprises in the Ethiopian market, and also for foreign investors also getting an opportunity to eye a slice of one of the largest economies in Africa. You find that across the African continent, Ethiopia is standing out as being a laggard in having an exchange. So this is an opportune time for investors, be it the local investors and also the foreign investors, to even come into the Ethiopian market.
And how are challenges like regulatory transparency, political stability and cyber security being addressed to build investor confidence?
I think let me just start from the foreign investors' perspective. One of the Achilles heels looking at Ethiopia is basically the repatriation of funds, whereby investors are not able to get their capital out or their monies out of the market. And as of last year, Ethiopia liberalized its foreign exchange market with that one-off devaluation, and then the currency depreciated close to 60% over the course of from July thereabout to the end of the year. So that has sort of improved the access to the foreign exchange and pretty much helping investor confidence. The other planks around cybersecurity and also the regulatory transparency, there are efforts with the financial sector deepening, which has been giving some capacity building, at least in the nascent stages of setting up of the Ethiopian Securities Exchange. And also there's been some partnership with, I think in December last year, a team from Ethiopia came to Nairobi basically to visit with the local securities exchange to be able to get some learnings, at least to address these issues such as cybersecurity and also the regulatory transparency. So I think these are some of the steps that the Ethiopian Securities Exchange is trying to do so as to be able to address these issues that is coming out. Obviously, political stability, we are getting into the fourth year whereby at least Ethiopia has been quite stable. And I think there's some political capital, at least to be able to address the instability that was there. So that, I think, it's something that is coming out quite neatly.
Okay, Churchill Agutu, economist at IC Group, thank you very much for joining us. Now, in southwest Nigeria, the weaving of traditional garments provides a much-needed economic lifeline for people while also attracting interest from abroad. Rupert Stone has this report.
Weaving for a living. Aso oke is a traditional fabric from southwest Nigeria. It is hand-woven by members of the Yoruba community there. In this impoverished region with limited employment opportunities, Aso oke provides a livelihood for local people like Abdul-Din Mariam.
This is our choice, but if you don't have passion for it, you may not be able to do it. In this town we are. I would say after this craft there is no other job that can give the amount of money this craft generates. There is no company here, nothing. That is why it's everybody's choice of work.
In early December, a festival is held in the area that includes exhibitions and a fashion show displaying the latest Aso oke products.
The Aso oke festival we are doing is progressing our business and it's promoting Aso oke. We cannot be wearing foreign fabrics all the time. If you look at the Aso oke closely, you will realize that it's different from every other fabric. After Aso oke, there's no other fabrics that can contest it.
Designers of Aso oke clothing are adapting their products to suit modern tastes, combining the traditional fabric with Western materials.
It's like this one.
Like this one. We mixed it with other materials and it made sense. These are the things that will encourage the youth to wear it. Already they think woven fabric is thick. That is why some people don't want to wear it. The weavers are making it light now. The texture is like every other material.
Aso oke's appeal is spreading globally, with Meghan Markle wearing an Aso oke garment during her trip to Nigeria with Prince Harry in May. The trade is not merely an opportunity to earn money, but a way for local people to express their creativity. Rupert Stone, TRT World.
A historic symbol of peace, the HERC Carpet has returned to the Peace Palace in The Hague after a year of restoration, strengthening ties between Turkey and the Netherlands. Balkis Demircan has the story.
A 114-year-old symbol of peace is returning to its home. The HERC Carpet, a historic gift from the Ottoman Empire to The Hague's Peace Palace in the Netherlands, is now restored and ready to continue its mission of fostering peace.
This is actually the largest HERC carpet outside of Turkey. We are talking about a carpet embroidered with more than 13 million stitches. Our carpet is displayed in one of the most important buildings where justice is dispensed, the Hague Court of Justice. The location of the carpet is highly significant, and the fact that this work coincides with the 100th anniversary of our diplomatic relations with the Netherlands adds another layer of meaning.
The carpet, originally gifted by Sultan Abdülhamid II in 1911, had worn down over the years. Restoration of the HERC carpet was a complex process carried out by a team of experts in Turkey. It involved sophisticated work on the delicate fibers, with each knot being carefully restored to its original state. To ensure authenticity, samples from the carpet were analyzed in Turkish labs to match the original yarns and colors. Traditional dyes from plants and roots were used, reflecting the carpet's rich heritage.
With great precision and care, the wefts, warps, and knots of our carpet were embroidered loop by loop. We completed the restoration work by checking almost all of the knots. We are proud to send off our HERC carpet, which was repaired by tying peace knots in the 100th year to serve peace for many more years.
After the final touches, the carpet was carefully packed and transported back to the Netherlands. The moment it was unloaded and laid out at the palace was met with great excitement. The Peace Palace, a symbol of international diplomacy and law, has housed this carpet for over a century, serving as a reminder of the long-standing connection between Turkey and the Netherlands. As the carpet returns to its rightful place, it will continue to symbolize peace and unity for generations to come. Belkıs Demircan, TRT World.
Take the best that exists and make it better. These are the words of Henry Royce, one of the founders of British luxury car manufacturer Rolls-Royce. And more than a century later, the Silver Lady has done exactly that, with a planned $375 million investment at one of its UK plants. Pinar Nishasta takes a look.
Rolls-Royce builds high-end, luxurious cars for elite clientele, but some of them are asking for more. And seeing as the company's motto is "the only limit is the customer's imagination," it has decided to put $376 million into its Goodwood facility in the UK. This division, known as Bespoke, will enable the production of even more breathtaking vehicles, offering next-level personalization with handmade stitches, gold details, wooden structures, and many other valuable luxury options.
This investment is an important step for Rolls-Royce. It's a clear statement of the health of our organisation, and what it does is it will give us the space that we need to build the more complicated client commissions that we have with the growth of Bespoke.
The Goodwood facility started with 300 employees, building only one car a day. That number has risen to 2,500 employees and 28 cars a day after BMW took over, after Rolls-Royce wrapped up the third best sales result in the company's history. It sold 5,712 cars in 2024 at an average price tag of $600,000. It is, however, 5% lower than the 6,032 sold in 2023, its highest ever, which it said it expected as it switches over to new models. Meanwhile, the incoming US Trump administration is threatening extra tariffs on imported goods.
In the future, in the United States, should there be a tariff situation, that's something that we'll have to take in our stride. But what we do know in the luxury industry, our clients tend to be more price elastic.
So, as long as Rolls-Royce follows the mantra of Henry Royce, and the customers have money, the brand seems set to roll on. Pinar Nishasta, TRT World.
Well, that's all your business news for now. Thanks for watching.